Chair, and thank you, President Lagarde, for being here. Indeed, what you mentioned is that for 25 years, the debate surrounding monetary policy has constantly been changing. And as you've addressed just now, and also in your recent speeches, there has been much more emphasis indeed on climate change and the effects of climate change it has on the ECB's, that's influenced by the ECB's mandate. Now, of course, climate is changing, global temperatures are rising, and yes, this could affect monetary policy. But what I'm trying to say here is that there are always external risks that could affect monetary policy. And in order to calculate such risks, we also have risk agencies. Don't you believe that the European Central Bank should be a bit more cautious when playing a role in supporting the secondary objective of climate change? And don't you think there is a risk that encouraging these greener investments will prompt governments to spend more, potentially also to unprofitable investments, which in turn will increase their debt and also increase inflation? Thank you.
Thank you very much for your question. You know, I think in our determination of our monetary policy stance, we try to take into account all risks. In delivering on our supervision mission, we try to take into account all risks as well. And to give you an example, geopolitical risk that result from the crisis in the Middle East, for instance, or from the Red Sea difficulties, we take that into account. We have to. And we have to use our judgment on the basis of all available information concerning, you know, the cost component of shipping, concerning the number of vessels that are rerouted somewhere else. So it's not to say that we only consider climate change consequences. We consider all possible risks to the extent that they affect either our projections, the inflation expectations, and of course our monetary policy stance. I think on the risks posed by climate change, we are not adventurous. I think we are realistic. And we are trying to be as cautious as possible, which is the reason why, as I was telling Mr. Lamberts, we will take into account the necessary discount when we have reliable data that we can trust and on which we can base our judgment. I equally think that if we were not doing that, if we were not taking climate change into account, we would miss out severely on a risk that is of a very special nature. I'll give you an example. We did together with EIOPA, ECB and EIOPA together, we did an assessment of what we call the insurance gap. And we realized that there is a very significant proportion of insurable risks that are simply not insured or not insurable. And we will begin seeing more and more of those premium payment term where insurance companies will say, terribly sorry, I cannot extend your policy because the risk that I'm insuring currently is too high. And whether it is at insurance or reinsurance level, this is going to be compounded. What is the link with what we do? Well, I would predict it's not something that I see now or that we see already now, but it's something that is in the making. There will be quite a few financial institutions and banks that will say, risk not insurable, risk not insured. Well, I'm terribly sorry, but I cannot offer the mortgage unless I offer it at such terms that I actually include some sort of self-insurance program, assuming they wanted to go in that direction. And that obviously has an impact on the transmission of monetary policy. So that's just to give you an example of how and why climate change considerations and impact that it has on risk really matter a lot for the work that we have to do. Thank you.
Thank you so much for your answer. And I do believe that it is good that we separate the debate from either the science, the climate change debate, and the green central banking policy debate on how do you pursue these kinds of policies. Now, I would really love to hear your answer on this, because it worried me quite a lot. When I read an article yesterday that one of your board members, Frank Elderson, steered the internal culture within the European Central Bank. And it was quoted in an article by Politico, where he told an internal meeting, if people don't buy into the institutions, the ECB's green objectives, they aren't welcome here anymore. I don't want these people anymore. And he even said, in person or an online meeting, why would we want to hire people who we have to reprogram because they came from the best universities, but they still don't know how to spell the word climate. Anyone already working at the ECB should be retrained. So what I'm trying to do here with asking this question is also, isn't the ECB now going into this kind of groupthink, that there's a certain mindset, not a mindset on what green central banking should be, and there is not enough of an internal debate at the European Central Bank on this? Thank you.
Despite the fact that we are focused on reality, anxious about the future, and relying heavily on sciences and facts and reliable data, we encourage, celebrate diversity at all levels. I have been criticized for supporting diversity. And I will stand for diversity, always. Not just gender diversity, which I have devoted a lot of my energy and time to, and will continue to do so, but diversity of thinking, diversity of background, diversity of views, because it is from that diversity that we will have the best conclusions, the best consideration, and hopefully the best policies. So I stand by my colleague, Frank, but I equally, and probably more importantly, I and others value diversity in the institution that I lead. And as I said, across the board, all the usual definition of what diversity means, but also diversity of thinking, diversity of background, and I think that we will improve our work as a result of that. Thank you.